Good morning, traders. Good morning, Bookmap community. How's everyone doing? Good to see you. Happy Monday. All right, well, let's jump into it. So first things first, let's talk about what happened last week. Last week was a little bit chaotic in the market. We've had this larger sort of balance area that we've been stuck inside as of recently. And we've just been bouncing up and down inside that range. From the lows back up to the highs, from the highs back down to the lows, again and again and again. And so at the end of the week, last week, what we had was what we call a look below that failed. So when the market tried to go lower on Thursday, and then on Friday, it came back up, we knew the market wasn't ready for continuation to the downside. That is a look below and fail. The highest probability coming out of a look below and fail is continuation to the opposite end of balance. Now, balance areas don't have exact references. There's not like a one exact price I could point to, but what jumps out at me very clearly is this area right here around 41.83. We got some weak references up in there. And that also seems to be the area where again and again, the market is running out of steam, running out of momentum. So that to me seems like a good target. If we failed to go lower and we got to go somewhere, looking for new sellers or new buyers, that seems like a great area to me. So that's sort of the main focus that I have coming into this morning. Can we continue this momentum that was created from the look below and fail? How will I measure that? Okay, so the very first level that I'm going to watch as an important level for potential support is going to be this area right here around 41.52. Okay, we could tell that was support around the end of the day for the market on Friday. That was also where the closing price on Friday was. That is also the half back from the overnight session over the weekend, and that is also where the the point of control from the weekend is. So the first level I'm watching to the downside to see, do we still have momentum up, is that area right there around 41.52. Can that hold as support? Now, if they can hold that area, I assume they're going to head up and test that overnight high. What does that mean? It means the market will push up above that level and then see if it can find new buyers up there. So does it just push above and pull back right back down, or does it push above and stay above? If it stays above, I look to test Friday's high, okay, which is up at 41.63. Exact same question there. Do we look above and pull right back down, or do we look above and find new business up there? If so, then I'm looking for that continuation higher, right? That to me is the signal that the market wants to head up to that opposite end of balance. Now, what's going to happen up there, I don't yet know. Right? But I can look for a trade from yesterday's high up into that area if we're finding support up there, because it tells me that look below and fail is still in action. That momentum is still going. Okay. So then what would tell me that that momentum is running out? Right? Well, that would be if the support in that overnight range doesn't hold. If the market opens and we push down in here and that area around 52 doesn't hold, well, then I'm looking to see, can we stay above the overnight low right here at 41.42. Can they find support above there? Or if they poke below, do they pull right back up? Any of that is sort of neutral to me. So if we don't find support here and we go lower, I feel neutral. If we test the overnight low and we do not find resistance, I feel neutral. But if we start to find new sellers below the overnight low, so if we push down here and then there's new business going down, well, then I say to myself, that momentum is over. That look below and fail momentum has come to an end. And then the next question is, okay, if that momentum is over, what weakness needs to be backfilled? And then suddenly the gap we left behind on Friday comes into play. So to me, it's pretty much if they can find buyers up here, they're looking to head up towards the 80s. If they can find sellers down here, they're looking to head back down towards the 4,000s. Okay. In the middle, while we're inside this overnight range, it will probably be very difficult to figure out, who's doing what, who's in charge, who's going to win, who's got more momentum. So I consider that a chop zone, and I'm just going to let them chop it up. $30 people hanging out. Good morning, everyone. That's pretty much it. I just went through my whole spiel. It only took 5 minutes, as it normally does. So please feel free to ask any questions. Good morning to Alexis, Hamza, and the $6 Million Man. Welcome. So if you wanted a better look at that concept that I was just talking about with the balance areas and why that's my focus, let's just we'll go look at a few of the previous ones. Why not? Right? So down here we had a balance area where the market was trading around inside a range. They were able to break out. They actually created another form of balance in this channel. But that led us to get up here to this higher level. We started with a little small balance right here. Broke out of that. Made another small balance up here. Failed to go higher, which brought us back into the previous balance. That caused the market to fail back down to that opposite end of balance. We looked below that area, but we didn't have any new sellers there. So where did the market obviously needed to go? Right back to the high, right? So it looked below, it failed. That caused the slingshot back up to that balance area high. We looked above it, and once again, we didn't have buyers up there. So what did it have to do? Slingshot right back down to the low, and we did it once more. No buyers, and the slingshot began. So that is why I am, trusting this momentum to continue to the upside today. Pretty much almost exactly like this candle played out last week. Right here. That was the look below that failed. Began the momentum. The momentum continued the next day. So I can easily see that exact same thing happening here today. And that is why it is the highest probability. I'm, of course, aware of the fact, though, that anything can happen. Look at all this choppity, choppity, chop. So inside this zone, they could give us any kind of day. I'm not like absolutely 100% committed to the idea that we have to go higher. It's just the highest probability in my mind. That's all. But I know what to look for. If that support around the overnight POC doesn't hold, if that overnight low doesn't hold, well, then I know. We got to pull back and look for that gap below to get filled. Hamza says, what Bookmap add-ons do you suggest? The only one that I use is the stops and icebergs, and I think it's amazing. I highly suggest it. It's not that it tells you direct things. It's not that I look at the stops and iceberg setting and I go like, oh, cool, I should buy now, or I should sell now, or I should put my stop here. It's more just like it gives me an idea of what's happening in the market. Is this a moment where a lot of the activity that's taking place is just computers that are trading in a certain type of range? It allows me to recognize those behaviors. And that to me is a huge edge. If for no other reason, just to manage my own psychology so that I don't get frustrated when I don't understand why the market's being weird. Another really powerful thing about it that I never predicted ahead of time, but I've come to love, is simply just looking at the liquidity in this form in the order book like this. So just the way you have all this color right here showing you the liquidity that's waiting to fill, right? And then you have the liquidity that is actually filling over here on this side. And so what happens sometimes is out of nowhere, all this liquidity disappears just like that in a flash. And when that happens, I know, okay, sit back and relax, Charles. Something's just come out, some piece of news or some important whatever, and the markets have just disappeared the liquidity, which means anything can happen. They can push it up 20 points, they can pull it back down, and it won't really matter. There's no way to judge what's going on in that moment because it's just random. There's too thin a volume in the order books for there to be any reliable information. So back in the day, before I had Bookmap, when these things would happen, I would just feel a sense of being lost. Right? Like the idea of like, what is happening? What's going on? Why is the market doing this? When is it going to stop? But now I see that liquidity go thin and I go, oh, here we go. Something's going to happen. Let me wait for it. Now, if I'm in a trade, probably I do nothing, but maybe that means I move my stop. Or maybe that means I just exit at market because I don't feel comfortable with that. If I'm not in a trade and I'm looking for an entry, maybe that tells me to wait, to hold off on that entry. Maybe if I've got a limit order in the books, I just pull that out because while that liquidity is thin, anything can happen. Do I want to be a gambler that's in the market when anything can happen? No, probably not. But here's where it gets fun. So then as soon as that liquidity starts to come back, well, then I know where does that liquidity come? Which side are they trying to hold? We're looking for continuation in that direction. So that to me is really becoming my favorite part of Bookmap. Just being able to not feel that sense of confusion when the market goes dark, which is very emotional. All right, so if you look at these different support levels, we talked about this earlier, but I'll just run over it once again because we've had a few new people join us. Welcome, new people. Happy to have you. So what am I looking at here? Well, I believe the market is going to be in a chop zone first thing when the market opens. but that the highest probability is that the market is going to go higher. So the area that I'm watching is essentially between 4140 and 4170. To me, this area is a chop zone. They could take it up, they could take it down, and it won't really tell us anything unless they give us information at specific levels, okay? So the levels that I'm watching above is the overnight high at 4161 and yesterday's high at 4163.50. Can the market get above one? If it can stay above, can it get above the other? If it can stay above, can we head up to test that resistance around 70? And then to the downside, I'm looking for support around 41.52. So if we push down, do we bounce there and turn around? Or do we need to continue lower and test that overnight low? If the market finds resistance up here at 70 or support down here at 40, it may be range bound, but the break of either one of those levels will lead to a lot of continuation in that direction. So I will look for new momentum in that direction if they do. Exciting morning, guys. Anything can happen, although I think the highest probability is support and continuation higher. Maya, good morning to you. Maya says, how come the market likes to go back and refill gaps and weak references? I'm not sure I have a great answer for that, to be totally honest with you. It's that old expression, nature abhors a vacuum. There is just something about unfinished business that the human mind doesn't like. If there's someone somewhere who wanted to buy there, the market will go find them and give them a chance to buy. It's the weirdest thing. Many a paper has been written on why gaps need to get backfilled. And I don't think anybody really knows. They just do. But what's different about the average Joe taking a piece of data like, oh, gaps off and backfill, and the way we use that data? Well, for us, it's just a single data point. We think in probabilities. So sure, the gap below us needs to fill, but there is a lot of other things that the market could tell us first that would lead us to believe that action is coming. Right now, there's no reason for that. We had a look below and fail. We had momentum all day to the upside last week. We stayed in the upper end of the range in the weekend. So right now, the market is telling us we don't need to worry about that gap below. Right now, we got momentum up. Let's worry about that momentum up. When that momentum is over, then we worry about the gap below. And so for us, that is getting resistance below the overnight low. That's a sign we need to start thinking about the gap. But right now, that gap's not even on my mind. I like to take the market one tick at a time. T.Y. Lambert, welcome. He says, what are we viewing right now? Well, on the left side of the screen, you're looking at a market profile chart. So that is the ES. Basically, the one on the left is Friday's range, and the one that's light blue in the middle, that is the weekend's range, the way the market traded over the weekend. And then over here on the right, we have Bookmap. And I'm sure you know what that is, if you're here. Tom says, arr. I love it. Welcome, Tom. Pavel's here. Good morning to you. Scooball in the house. The Shaw. The whole gang is here. 58 people. Let's smash that thumbs up, please. Those thumbs ups really help out. Convinces YouTube to send some new people our way. 10 minutes till the market opens. Any other questions for me? Waffles, good morning to you. Screwball says, Friday was such a textbook market. Yes, sir. I concur. For those of you that are just joining for the first time and have never heard of me and don't know anything about anything that I ever do, I trade the auction process. So I look for momentum, balance and excess. And yesterday, Friday, was just a perfect day for it. We had a gap up. That was the market telling us we had momentum up. That momentum continued first thing in the morning with what we call a gap and go. So that was a confirmation of that momentum up. Pushed higher, the market got cessation, which was a signal that momentum was over, at least for the short term. Market went sideways for a few hours, and then it broke the high, and it began that momentum once again up into the end of the day. Now, none of that in and of itself is really all that exciting. It's pretty textbook, right? Gap up, gap and go, trend, rotation, breakout, continuation. Textbook. But what really made it fun was the fact that it was a look below and fail of the balance. The fact that we watched the exact same thing happen a few days before, and we knew we were seeing the same thing once again. Opened, momentum higher, continued all day, up to the opposite end. Momentum, continuation higher. Well, we just won't guess what's going to happen next. And so you say, well, Charles, but what about the weakness? There's so much weakness. You got the gap that needs to fill. That's weakness. You got the lows at 71 are weak. You got the lows at 36 are weak. You got these single prints you left behind on Friday that need some backfilling. With so much weakness behind you, shouldn't you be bearish? Shouldn't you think the market has to go do that? Has to go deal with all of that? No, because the momentum is still in the market. It is only once I get a signal from the market that that momentum is over that I will then take that weakness into account. And once again, that is resistance below the overnight low. New selling below 42 is that sign. We need to go repair that weakness. And I'm not going to worry about it until I see the sign. Thaddeus says, I didn't realize there was a way to filter the bubble size. Where can I find that info? Yeah, I think you literally just right click. Heat map settings. Yeah, volume dots. There it is. Volume dots. Yeah, the reason I do those dots, it's just like a personal thing. Visually, when the whole thing is covered with dots, I just find it distracting. Like, I don't know, there's something about all the parallel lines, the squiggly lines, and a million little circles. It's like too much for me. So I really only use those to show me huge imbalances, right? Those circles are showing you the delta between the buyers and the sellers. So if there's way more sellers, I want to know, or way more buyers, I want to know. Otherwise, I get my information on volume more from the volume profile. So yeah, I'd rather be able to clearly see, the bid-ask spread and where it's finding support and resistance. Lampert says, is the left side of the screen found in Bookmap? No, it's not. It's a separate software called Window Trader. But you could find anywhere, if you just Google market profile software, anywhere that has market profile software. But it is a separate thing. I also have, you'll see later on, I also have a set of charts in the background here. I call the market internals. That is the breadth, the advancers versus decliners, and then the ticks for the NASDAQ and the NYSE. And then I keep the SPX and the NDX up on my chart on 15-minute candles because I like to look at the 20 moving average on the 15-minute candles, the simple moving average. But that, that doesn't come up till later. First, we got to get through that chop zone I talked about. Let the market grind up and down, and all we need for that is price, volume, and time. My Bookmap settings for the volume dots, clustering by volume with 50, and then minimal display volume 300. You don't have to copy mine though. Play with it. See what you like. That's what I did. One thing that you will hear me if you do choose to become a member of my community, the Piratetraders Brigade, one thing that you will find me talk about a lot is I don't encourage traders to ask other people for settings and stuff like that. What software should I use? What settings should I use? How should I do that? I know that's instinctual because you're like, well, if somebody else knows what they're doing, I should just do what they do. But what you don't realize is your brain has a very specific way of processing information, which is different from them. And so the only real way you can know is just by trying different things out. Play with the settings, see what works for you. Two minutes till market open. Any last questions? Before everything just goes live. Scooball says, but people have to start with something. Fair enough. Fair enough. There you go. It goes, at least it's a baseline. I didn't know I could. Yeah, fair enough. All right, everybody, deep breath in, deep breath out. Visualize the day. The market is going to open, and you are going to maintain complete control. You're not going to let your emotions dictate your behaviors today. You're going to allow the market-generated information. And so the chop begins. So as always, when the market opens like this, we don't really know which way it's going to go, but we can get insights from the market. So we're going to test support and resistance levels. We ask ourselves what happens when we get there. So we're testing the first potential support here around 52. What happens when we get there? Do we find support? If so, when the market comes back up, we ask what happens at the halfback, which is 50% of the range. Does it find resistance there? If it finds resistance, we look for it to head lower. If not, we look for it to head up and test the next resistance above. And then we ask the same question there that we asked at the support. Do we find resistance? If so, do we find support at the halfback? And we just let it keep going, chop, 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 between these levels, again and again and again, until it finally holds support or resistance at the halfback and then breaks one way or another. We assume they'll just keep chopping it up. We call it a chop zone. All right, there's the support. So now we're looking to see what happens at halfback. Does that become resistance for another smack lower? Or do we pass right back through, heading back for the high? All right, first support breaks, heading down to the next one. So now we are looking to test 41.4650. That was a base of single prints on Friday. The reason that jumps out at us is because it is weakness in need of repair. The market likes to backfill any area that has single prints like that, but it can often find support right at where those single prints started. So that is our next potential support. Well, on top of it being a chop zone, I think it's just become what we call a bot shenanigans zone. So the reason we call it shenanigans is because a lot of times the computers, the algorithms, they kind of have a bizarre way of accumulating positions where they grind up and down inside of ranges in a really bizarre way. I would describe this area as that right now. So not that that's any kind of surprise. We were expecting chop. Okay, so now that we're back at halfback, as always, does it become resistance or do we pass right through? Scooball says the overnight low is weak. That is correct. But it's all the same to me. If we found support at 46, I would assume that we're not going to test that overnight low either way. And if we broke support at 46, I'd assume we're testing that overnight low either way. Because it's a chop zone. And they can do whatever they want. All right, so passing back through. The halfback tells us that the chop will continue. And we are likely to find resistance and come back down for those lows at some point. But for now, we're looking to head up and test the resistance. So we got a weak high at 57 and then resistance up at 59. Is they just choppy, choppy, choppy. Scott says, I want what you have in the morning. It's called cocaine. Never start the day without it. No, I'm just a morning person. I just have energy in the morning. Take comfort in the fact that I'll be dead by noon. Scott says the NQ is looking weak. Let's take a look at the NQ. Okay, so to do the NQ, let's actually start by zooming out and looking at the daily real quick. Just because I have limited screen space these days. Okay, so what you can see, what is different about the ES and the NQ. This is the ES's balance area here, this larger big box. So you can see we're going from the lower end of that box towards the upper end. That is bullish, right? That is a sign we got to keep going till we get there. But the NQ, on the other hand, is already at the top of their box, right? They're already at that balance area high. So this morning could be a look above and fail. Da, da, da. Which would be the exact same thing that happened there last week. So while the ES is halfway heading up towards its high, the NQ could be failing and heading all the way back down towards its low. So that doesn't mean anything right now. That's just one piece of data to take into account. They could just as easily find support here and get continuation as well, right? This might just be a back test. Breakout, back test, go. So let's get a little closer. We'll look at the market profile chart for insights. Okay, well, first insight, we just got below the overnight low. That is bearish to see. So now if we get resistance at 13,290, we can look for continuation lower from there. Right? Because of that could be a look above and fail. So then all that stuff we talked about before when we were talking about the ES, all the weakness we've left behind, well, we now head on down for that weakness in the Q. First set of single prints down to 13,198 and monitoring for continuation lower from there. If we get resistance at the overnight low. So NQ looking bearish, but the ES still in a chop zone, still neutral. Scott, I don't know who this Nightbot is, but Nightbot needs to chill out. Nightbot says, stop spamming caps warning. The man is not allowed to laugh out loud with joy and excitement. Nightbot, what you doing? Magirara? Sorry, man. Slaughtering that. Says I'm shorting the ES. Well, you go for it, brother. Short that ES. Just don't fall in love with it, right? There could be support at 46. There could be support at 41. And the market could instantly turn around and head right back up through that opening price. So nothing wrong with going short if you like to trade the chop, but just do not fall in love with that trade. In my humble opinion, of course. What is this, North Korea? Man can't laugh. He says, yes, I'm monitorizing the zone of 46. Yeah, 46 would be a great place to take profit. The only problem is you just don't know how long it's going to take to get there. You might have to sit here. It might go up. It might go down. It might go up. It might drive you nuts first. But it's a fair place to take profits once it gets there. Speaking of which, here's your chance. Here they come. All right, so here's the potential support, round 46. For the chop to continue, we'd be looking for them to head back up and look for resistance at the halfback. All right, so internals wise, things are at the very beginning, very beginning. You got to understand about a chop zone, man. They can just fool you quick. But this is the very beginnings of a potential for a market to start to build momentum down. What do they want to do? Well, they just got the advanced reverse decliners below that zero line. They want to keep that below. Same thing with the ticks here. They want to keep those ticks trending lower and below that zero line. And also on the 15-minute candles, on the SPX, they're testing that support right now. So if that support breaks, that would also be bearish to see. So it is still a chop zone, but they're just starting to give us some bearish signals here. Patrick says that's a new one. What's a new one? 7 Mile Reach. Did I hear rubber chicken in the background? No, that's my door buzzer. I guess it does sound like a really intense rubber chicken. Like a rubber chicken that's getting driven over by a truck. So it's interesting to me to see this liquidity in Bookmap is getting eaten up. Real support stepping in there. So now the next thing we're looking for is the look below of the overnight range Do they just poke below there and pull right back up? Or do they poke below there and get new sellers? New sellers would be bearish. A look below that pulls back up would be more chop. And this, to my mind, means probably more chop. Some computer changing its mind. Oh, fuck, we're filling. Oh, no, what do we do? Oh, okay, well, okay. It's over. Oh, monetizing. Yeah, yeah. Hey, man, it's cool. It's a cool word. It's like you're watching it and you're monetizing it at the same time. Mikeo says, are those advancers versus decliners appear as a symbol on Thinkorswim? Yeah, it's money symbol ADSPD if you want just the S&P 500, or ADD if you want the entire NYSE market. And they should be available in any broker. And there you go. They turned off the bot shenanigans zone. Once again, Bookmap, very helpful. So we know they did some sort of real business here. This was not a game. They wanted to get some kind of position going. Then they pulled the market back up. And when it started to run out of steam, they just said, okay, goodbye to this iceberg up here. That was the bot shenanigans zone. So that is actually a little more bearish, I think. Let's wait and see. Very exciting morning here. All right, well, I'm only here with you guys for 5 more minutes. This one ends at 10 a.m. So do you have any final questions for me? Is there anything you're just dying to know before I go? I won't be back for a whole week. Come on, Bookmap, get after it. What are your questions? Also, what's it going to take to get some thumbs up in here? Come on, 129 people hanging out, only 45 thumbs up. You're hurting the Pirates' feelings. Show them some love. Ten likes. Thank you, guys. Appreciate you. Frito says, so far, Friday's J-Lo is holding for support. Yeah, I wouldn't call it support, though. But yeah, technically it is. I would really more think about it like the overnight low. They're just keeping us inside that overnight range. But why? Alexis, do you continue live after? Yes, I'm switching to the Brigade live stream after this one. So if you are a member of the Brigade, you can sign up at Piratetraders.io. There's a link in the description. If you're a member of the Brigade, I'll see you in the private stream. Coffee Addict says, what's a weak low? It's a great question, Coffee Addict. A weak low is essentially an area where the market turned around and reversed and went the other direction, but they didn't really complete the auction process. So there is likely still some liquidity waiting down here. That liquidity waiting is a target for the market when it comes back that direction. As I said this morning, if we can poke below that overnight low, find resistance there, we start to get bearish and head down for that weakness. Well, to me, Bookmap is saying that the bot shenanigans zone is over. So whichever way they break it, hopefully we can start to get some movement here. You can just see it's getting tighter and tighter. They're tightening that spring even more and more and more. Scott says, seems like shorts are running out of steam. No, I'm going to disagree with you. And the reason I will say so is because they haven't had to test the halfback. We keep pushing lower and bringing in new sellers at that lower price. So that's not running out of sellers. Not yet, anyway. All right, and with the printing of the B period, it is time for me to say goodbye to the fine people of Bookmap. Au revoir. You shall be missed until next week when we meet again. For members of the Brigade, head on over to the Brigade live stream, and I will see you there in about 2 minutes. Thank you all so very much, and look forward to seeing you next week. Bye. Well, speaking of running out of sellers, here's their chance. They have come back to test that halfback. So 41.50, can it hold as resistance? We'll never know.